What constitutes a trading company? Now, the legislation does not specifically provide a definition as to what would be trading or non-trading. That's left to interpretation. Sorry for the noise outside. The legislation does say that a trading company would be a trading company as long as they are trading activities to a substantial extent. Now, that's left to interpretation. HMRC do provide guidance on this, which is the 80-20 test that I'll explain in further detail. Now, to begin with, why would the whole trading company be important? One of the conditions for business asset disposal relief to get the 10% would be that you're disposing shares in a trading company. So that's one reason why it's important. Another reason would be, for example, business property relief for inheritance tax purposes, and company purchase of own shares, whereby you'd prefer the capital distribution rather than the income distribution. Now, as I say, the legislation says substantial extent. HMRC bring out the 80-20 guidance. Now, as long as not more than 20% relates to non-trading activities, then you'll be fine. You can use this as some sort of guideline or basis. The three indicators which are not conclusive, meaning that if one is met, it doesn't mean that it's a non-trading company, for example. You have to look at the whole picture. The three items are, or indicators are, the asset base. So, for example, you'll have on the balance sheet, the asset base on the balance sheet, you'll have plant and machinery, you might have an investment property, and then you have cash and debtors, for example. Now, this investment property brings in rental income. If the value of this investment property exceeds 20% of net assets, then that would determine or point towards a non-trading company. So that needs to be looked at. However, not conclusive. The second indicator that needs to be looked at is turnover. So, is more than 20% of income relating to non-trading activities? So back to the first example, which is that you have the investment property, and the investment property is receiving rental income, is more than 20% of the rental income, is more than 20% of turnover related to non-trading activities, which is the rental income. And the final indicator would be time spent by officers and employees or expenses. So as long as more than 80% is related to trading activities, then you'll be fine. You'll have the trading company sort of tag. So that's a basic outline. Obviously, each case needs to be looked at, each balance sheet needs to be assessed, each profit and loss account needs to be looked at as well. But that is when determining or ascertaining whether a company is a trading company or not.